So, hello everyone, good evening to all. So, in our last session, we have done our discussion on the section number 17 and the credit in special circumstances, that when you are applying for a new registration, then how you will be eligible to claim the input and input goods related input tax credit which is available in your inventory. We have also done what about the input tax credit in case of registration on the basis of voluntary. We have also done in case of exempted to taxable and taxable to exempted, and composition to regular and regular to composition. Then after we have started our discussion that you will not be eligible to claim the input tax credit on account of personal expenditure, but if there will be any business expenditure, yes, ITC allowed. If you are making only exempted supply, in that case also no ITC allowed on account of the inward supply. But suppose if you are manufacturing a particular product, one is taxable, another is exempted from a same type of inward supply, in that case partial input tax credit will be available, and the same concept will be applicable in case of business and personal purpose, and accordingly your ITC will be calculated through a rule number 42 which will be applicable in case of input and input service, and rule number 43 which will be applicable in case of capital goods. Calculation we'll discuss later on. Okay, and the most important things are, then after we have started the discussion on the advisory on account of banking company and NBFCs. Banking company and NBFC have option, they can follow the regular option, that is claim the input tax credit as per GSTR 2B, go for various type of reversals, rules are 42, 43, multiple calculations because huge number of transactions. And they have second option, they can directly claim 50% of their input tax credit which is available in GSTR 2B less the blocked credit. So both the options we have to compare, and accordingly we have to provide our suggestion to the banking company and NBFC, and accordingly they can avail the opportunities. Then after we have done the list of blocked credit, that means no ITC allowed on these type of goods and services. First, motor vehicles, but if motor vehicles is used for further supply, for training purposes, for passenger transportation, ITC allowed, or the repair, renovation and the insurance related to motor vehicle will not be allowed, but if used for three purposes, allowed. Same provision we have covered in case of vessel and aircraft. And we have also done food, beverages, beauty treatment, ITC not allowed. But if the same has been used for further supply, then ITC allowed. Then after we have started our discussion on the construction. Sir, what about the input tax credit in case of construction? If a particular product is a part of immobile property, attached with immobile property and not removed without structural damages, the same will be treated as immobile property and no ITC allowed. But if I am providing the construction related services to someone else, and for providing that services to someone else, I bought the cement, I bought the iron, I bought the steel, in that case, yes, ITC allowed because I am providing the services and I am paying the tax on that services as well. Sir, all these things are okay for you? Just let me know once in the chat box, sir, everything is fine, everything is okay for you. Everyone? Yes. Then after, we have cover a specific example that, sir, I have constructed a building for my own purpose, okay, and I am providing that building on rent, and on the rental income I am ready to pay GST. Then whether I will be eligible to claim the input tax credit on account of building, that is what is the thing. Okay, so first we'll try to discuss a provision of section 17 subsection 5 related to construction and immobile property. Immobile property, ITC not allowed. Okay, in case of immobile property or ITC is not allowed, but government has mentioned that if there will be a plant or machinery, then ITC will be allowed. Now question is that what do you mean by this plant and machinery? So plant and machinery means a particular equipment, a particular plant through which certain manufacturing process is going on. Okay. Your pipeline which is established in the factory, that is also considered as plant and machinery. Now one question is that whether the shed which has been put on the factory building, whether ITC will be allowed or not, that is what is the question. In that case, the taxpayer has claimed the input tax credit, but the departmental authority has raised the concern that this shed is considered as an immovable property, so ITC not allowed. In that case, the taxpayer has filed a very specific argument that, sir, these sheds are considered as plant and machinery because they are not attached to an immovable property. They are just fitted on the earth through the screw, and the same can be removed very easily without structural damages. So the same should be considered as a plant and machinery, and the same decision has been pronounced by Honorable High Court in this situation that the shed will be considered as plant and machinery and ITC allowed. So sir, how we are going to present, that plays a very, very, very important role. So we also need to focus on our presentation, that how we are supposed to present in front of the departmental authority so that your ITC on account of plant and machinery will be allowed. Okay, sir. But if you are constructing something for your factory purposes, that is called as construction, ITC not allowed, because construction immobile property, ITC not allowed, whatever will be your purpose, ITC not allowed. Okay. Now, here, a specific situation that we are covering, that is building. For rental perspective, and taxpayer will ready to pay GST on rent. Okay. Now the departmental authority has said that you have claimed the input tax credit on account of construction of building, ITC not allowed. Taxpayer submitted that, dear sir, I will use this building for my business purpose. I will generate rental income from this building and I will pay GST on the rental income at the rate of 18%. So ITC should be allowed. But departmental authority has rejected. Now the appeal, the writ petition has been filed before the Honorable High Court. In this case, the Honorable High Court has also observed that this is a building, so ITC should not be allowed in case of building. Then after, the petition has been filed before the Honorable Supreme Court, and Honorable Supreme Court has made a very specific judgment. And the Honorable Supreme Court has observed that ITC will allow if it is a plant or machinery. Now question is that the definition of plant or machinery is not given in the act. So how we can calculate? So for that purpose, the Honorable Supreme Court has considered the journal definition from the journal dictionary, and they found that plant means a particular unit through which revenue is going to be generated. So in this case, the building is covered under the definition of plant or machinery or not, that is the concern. So Honorable Supreme Court has observed that as this building is not a machinery, but this machinery, this building may be considered as a plant because plant is a specific thing which generate revenue. And in this case, the building is also going to generate revenue and taxpayer is ready to pay GST. So it should be considered as plant. And in the definition of section 17, subsection 5, government has specifically mentioned in case of plant or machinery, ITC will be allowed. So to claim the input tax credit, there is a requirement of fulfillment of any condition from the two, whether it is a plant or machinery. So it is a plant as per the journal dictionary. So yes, ITC allowed. A very special judgment has been pronounced by Honorable Supreme Court in case of Safari Retreat. So multiple issues filed by the multiple taxpayers on account of the claim of input tax credit regarding the building. So the Finance Ministry has come up with a specific provision in the 55th GST Council meeting, and they said that in section number 17, subsection 5, we have mistakenly written plant or machinery. It should be considered as plant and machinery from retrospective basis, that is from 1st of July 2017. And when the provision come into picture from 1st July 2017, become a plant and machinery, that means both the conditions are required. So in this case, the Honorable Supreme Court has observed that this building is a plant but not a machinery. So both the conditions are not fulfilled. So through this change, through this amendment, retrospective basis, the Honorable Finance Ministry has changed the complete picture, and now you are not eligible to claim the input tax credit on account of building. and you are going for the construction and paying the rent on the GST as well, but you are not eligible to claim the input tax credit. A very special judgment of Safari Retreat. So, sir, I hope through this particular example, the effect of and or is clear in your mind. That plays a very important role. I am always saying that when you are learning the law, at the same time, you should learn the law with reference to the analytical skills. Each and every word is important in the analysis. For one single section, multiple interpretation may be there. So we just need to think accordingly. We just need to provide the interpretation accordingly so that the maximum utilization we can go for. So in case of construction, ITC not allowed, the same is blocked under section 17 subsection 5. But in case of plant and machinery, ITC allowed. You just need to fulfill that this is a plant and machinery. And if you are a works contractor, in that case, ITC allowed to you. But on your services provided, you have to pay GST. Government contract 12%, normal contract 18%. Okay. Now, sir, in section number 17 subsection 5, they have clearly mentioned that on account of your any personal consumption, ITC not allowed, blocked. If you are a composition dealer, ITC not allowed, it's blocked. Also, they have clearly mentioned that, sir, if you are paying any amount on account of any notice, any decree, any judgment, suppose you have paid less output and less claimed input tax credit, and due to the judgment decree you are eligible to claim the input tax credit, in that case you cannot avail the benefit, because due to judgment, due to decree, due to order, your ITC will not be allowed, the same is blocked. ऐसा नहीं है you are paying any amount on account of notice, any amount of judgment, any amount of decree for penalty, and you are saying that we can claim the input tax credit for the penalty, not allowed, the same is blocked. Okay. So this is also one concept which we need to keep in our mind. In case of our canteen facilities, ITC not allowed, that we have already done, food and beverages. But if there is a mandatory requirement under the Factories Act, that if your employee is more than 250, then there is requirement of establishment of a canteen. In that case, yes, ITC allowed. On account of CSR expenditure, earlier the ITC was allowed, and one decision of Honorable High Court was also there under service tax regime regarding the CSR expenditures, ITC allowed. But in GST regime, on account of CSR expenditure, ITC not allowed. The same is blocked under section 17 subsection 5. Government has inserted the clause. So these are the line item on which your ITC not allowed. We just need to keep this concept in our mind. Whenever we'll find these type of expenditure, these type of entries in the financial statement of our client, we just need to directly ask that, sir, have you claimed the input tax credit? And if you have not claimed, in that case, provide the proof. We can check it from books of accounts. Okay. So this is my section number 17, subsection 5. Sir, just focus on memory technique. I think you have observed that through this section number 17, we are saying on your personal expenditure, ITC not allowed. On your exempted item, ITC not allowed. In case of banking company, NBFC, 50% of ITC you can claim. These are the line item on which ITC is not allowed. So this particular section is going to deny or imposing the restrictions to claim the input tax credit. So this is a danger zone for us. And as number 17, we are saying 17 khatra. Number 17 is a danger zone. Number 17. Hindi में बोलते हैं, we are saying in Hindi, that is 17 khatra, that is danger zone. Why danger? Because this section is going to impose restrictions to claim the ITC. So this section number 17 is restrictions to claim the ITC. Section number 16, 16 आने सच ITC मिलेगी फटाफट इनपुट टैक्स क्रेडिट. Section number 17, 17 खतरा डेंजर जोन, restrictions to claim the input tax credit. And sir, in our last session, we have done one more concept, that is credit in special circumstances. When you are taking the GST registration, you will be eligible to claim the input tax credit. When you are taking the voluntary registration, in that case also you are eligible to claim the input tax credit. When you are converting from exempted to taxable, you are eligible to claim the input tax credit. When you are converted from composition to regular, then also you are eligible to claim the input tax credit. That means this particular section is going to provide multiple happy news to you, because for claiming the input tax credit and regarding the eligibility to claim the input tax credit, this is a very good information for all of us. Okay, we all are happy that we are eligible to claim the input tax credit. Hence, section number 18, making happy. Just try to interlink the word 18, happy. Section number 18, making 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 happy. This section talks about the credit in special circumstances. Section number 18, making happy, that is credit in special circumstances. Section number 18, making happy, that is credit in special circumstances. 17 खतरा, restrictions to claim ITC, 16 आने सच ITC मिलेगी फटाफट. Section number 18, making happy. Okay. Next, sir, we'll discuss a very small concept related to job work. Okay. Although in section 143, we'll discuss the detailed concept of job work as well. But now we'll discuss a small concept with the detailed concept as well. But we'll discuss the reference of section 143 later on. But we'll discuss the job work concept here now. Sir, the concept of ITC, the concept of restrictions to claim the input tax credit, the concept of credit in special circumstances, all these 3 points are okay for everyone. Just let me know once, sir. Live chat box is here. You can put comments. I request each one of you. Job work under GST. First of all, what do you mean by job work? Okay. Suppose I am a principal. I have a unit in which multiple product is going to be going for manufacturing. Okay. So many times it is not feasible to establish all the machinery in the particular plant, or to handle all the work at one end. It is also not possible. Okay. So in that case, what I am doing, I am just sending certain goods to someone else, and that person is going to perform that relevant task on the particular product and send it back to me. Okay. So I am the principal, I am sending the goods for job work purposes. So the person who is going to work on that particular product, that is called as job worker. So one is principal, another is job worker. Okay. In that case, when I am sending the goods to the job worker may perform the task and return back the goods to me. There may be chances that the job worker may further supply that particular goods to another job worker for further job work. That is also possible. Or there may be chances as a principal, I may directly sell the product from the job worker place. Okay. Total 3 scenarios. One is return back. Another is another job worker. Third one is supply from job worker place. These are the 3 probable scenarios in this situation. Return back, another job worker, supply from job worker place. Okay. Now, sir, principal, job worker. Okay. There may be 2 scenarios that this job worker is registered, this job worker is not registered. हो सकता है ना, the turnover of job worker crosses the 20 lakh or 40 lakh rupees, so job worker has taken the GST registration. Or suppose a job worker is a small job worker, so job worker has not taken the GST registration. Both the scenarios are possible. So first thing, when a principal is sending the goods for job work perspective to a job worker, and if the job worker is registered, then no need to worry. But if the job worker is unregistered, in that case, the principal has to add the place of the job worker as an additional place of business. We all know that on GST and common portal, one is principal place, another is additional place. We may add one or more additional places on the GST and common portal after submission of required documentation. Okay. So now, if the job worker is an unregistered person, in that case, the address of job worker should be added to the principal as an additional place of business. That is what is the must required. Now, there may be one question in your mind that, sir, if I am not supposed to add it in the additional place of business, what will happen? Sir, during the inspection, if departmental authority has found certain goods on the job worker places and the job worker place is not registered and departmental authority is coming to you as your principal place of business and they are going to match the inventory, but they are not finding the inventory in a very well manner. In that case, you may say that my stock is available with this particular person. So government may ask that, sir, where is the additional place in your GST records? You said that, sir, we have not added the same. In that case, departmental authority will directly say that whatever will be goods which is available with the job worker will treat it as a supply and charge GST. Suppose at the place of job worker, 1 crore goods is available. So on the rate, suppose GST rate is 18%, departmental authority will directly ask 1 crore multiplied by 18%, 18 lakh rupees with interest with penalty. So a very huge implication is there. We also need to suggest our client that, sir, if you are dealing with any job worker, then just do one thing, sir. Add this place as additional place of business. We just need to at least we at least need to convey our client that this will be the probability of the scenario when you are not providing the details to the government regarding the job worker. That is what is the importance which we need to keep in our mind. Principal to job worker. Second thing, sir, when you are sending the goods to the job worker, return back, maybe further supply to another job worker, maybe supply to the buyer by the principal, how government will get the data? Okay, there may be chances that principal has transferred 1 lakh units. There may be chances 10,000 unit is the normal loss, so 9,000 or 90,000 unit will be the output. So how government will get the idea about the goods which has been sent with the job worker has further supply, job worker has transferred to another job worker has written back the goods? Government require the data. So for that purpose, government has come up with a specific type of form which is available on GST and common portal, and government said that, Mr. Principal, you have to file this form on quarterly basis so that we can get the data related to your job work. We can get the data with quantity. Okay. So every principal who is taking the services of any job worker or who is dealing in job worker, this form ITC 04 is mandatorily required. I know this form is very crucial, very complex. In case of textile industry, 90% of textile traders, textile manufacturers are not filing this particular form, but other industries are regularly following this particular approach. And at least we just need to suggest our client that if you are not filing this form, in that case, audit and assessment, you should ready for the penal provisions. May 50,000 penalty imposed by the departmental authority on account of non-filing of this ITC 04 form. So we just need to suggest this thing as well to our client. Okay. Now, one more thing, sir, as a principal, when I am supplying the goods to job worker, for job work perspective, in that case, condition is that the same good should be returned back within 1 year. Okay. Suppose I have supplied the goods to the job worker and job worker has not returned the goods within 1 year from the date of supply. In such a scenario, it will be treated as sale. It will be treated as supply. So we just need to keep in our mind when we are checking the books of accounts, we just need to confirm and ensure that, sir, any entry which is pending more than 1 year in the books of accounts of principal from the job worker, we have to ask with our client that, sir, return back these goods, otherwise the same will be treated as supply and you have to pay GST on that. This is on account of input goods. There may be chances that principal has supplied certain capital goods to the job worker, certain plant and machinery, certain equipment, the same should be returned back within 3 years. Because capital goods hai, so they have given an extended period of time, that is 3 years. Within 3 years the same should be returned back, otherwise the same will be treated as your supply. So sir, principal job worker, first condition that the same is to be added as an additional place of business, otherwise whatever will be the goods which is available with the job worker, the same will be treated as supply. Three purposes: ITC 04 is mandatorily required, quantity wise detail is required, input goods if you have sent, then within 1 year the same should be returned back or further making supply, or capital goods there is a 3 year. Sir, now question is that, sir, what is the relevant section for this specific provision? So sir, Sunona, there is one concept in the human brain that whatever is the work I am doing, that is 100% perfect. I am doing with 100% perfection. But if the same work some other person is going to perform, in that case that person will perform with less efficiency. Am I right, sir? This is the concept of human nature. This is the concept of human perception. If I will perform with 100% efficiency, if someone else is going to perform with less amount of efficiency, so sir, we can say when some other person is going to perform, that work is called as 19, and if I am going to perform, that is called as 21. In Hindi we are saying that मैं करूंगा वो 21 करूंगा, दूसरा करेगा वो 19 करेगा, that is 19 work done by others. So this section number 19 is on account of work done by others. That is job worker. Section number 19, work done by others, that is job worker. Section number 19, that is work done by others, that is job worker. So whenever we'll look on section number 19, first concept should be there, 19. So work done by me is 21, work done by others is 19. So this section number 19 is work done by others, that is job worker. Am I right, sir? The complete concept, the complete section is okay for everyone? Sir, are you getting the points? Are you enjoying the same? Please let me know once in the chat box. Now, next concept. This concept is of input service distributor. Sir, just I am taking one example, and through that example I am just going to explain the complete scenario. Okay. In Jodhpur, Rajasthan, we have the head office. In Jodhpur, Rajasthan, we have the head office. Okay. And we have multiple branches. Suppose one branch is at Maharashtra, another branch is at Bengaluru, third branch is at Tamil Nadu. Okay. Head office is at Jodhpur, Rajasthan. We have branches at Maharashtra, at Bengaluru, at Tamil Nadu. Okay. The Jodhpur head office has availed a service of consultancy. The Jodhpur head office has availed a service of consultancy, and that service is going to be utilized by Maharashtra, by Bengaluru, and by Tamil Nadu, all the branches. That means this service has been taken industry as a whole. Okay. The service charge, the consultancy fees has been given as 1 crore rupees. GST has been charged at the rate of 18%, 18 lakh rupees. The invoice has been raised by the supplier of service with the name of head office Jodhpur, Rajasthan. When the invoice has been raised with the name of Jodhpur, Rajasthan, then but obvious the ITC will be reflected in Jodhpur, Rajasthan head office only. But this service has been utilized, has been availed by the Maharashtra, by the Bengaluru, by the Tamil Nadu branch as well. So this ITC should be distributed between 3 of the branches because this service has been taken industry as a whole. But the same has been credited to Jodhpur head office only. So due to that, there may be chances that there will be an accumulation of input tax credit in the hand of Jodhpur head office and no ITC in hand of Maharashtra, Bengaluru and Tamil Nadu, although the services has been utilized by the branch. So this will create certain mistakes. Hence, government has come up with a very specific provision. Government said that whenever a head office is going to avail the centralized services, you can say, and that services has been taken as an industry as a whole, in that case, the head office has to distribute the input tax credit for various branches. So there may be chances that head office may generate the invoice with the name of Maharashtra, Bengaluru, Tamil Nadu and transfer the ITC. But government is saying through this mechanism, no transparency will be there. Because valuation can be done in any way. So no transparency will be there, but we require the transparency. So what we need to do? So for that purpose, government has come up with the concept of ISD, Input Service Distributor. Government said that head office, you have to take a registration as an input service distributor. Head office said that after taking the registration as a ISD, what I need to do? So government said that Mr. Head Office, you have to file a specific form on GSTN Common Portal, and by filing that particular form, you can transfer the ITC to Maharashtra, Bengaluru and Tamil Nadu. So the Head Office Rajasthan has asked, sir, what will be the mechanism for transfer of input tax credit? Can you please suggest the mechanism for transfer of input tax credit? So Head Office said, the government said that Mr. Head Office, whatever will be the turnover of various branches, you have to distribute the input tax credit in the turnover. Suppose the turnover is equal. For Maharashtra, for Bengaluru, for Tamil Nadu, the turnover is equal. In that case, whatever will be the figure of ITC, you just need to do 1/3. 18 lakh multiplied by 1/3, 18 lakh multiplied by 1/3. So 6 lakh, 6 lakh, 6 lakh will be the ITC that should be distributed by filing a form. Your ITC should be reflected in the return of the branches, and branches can claim the input tax credit. So that transparency will be there because you are distributing the input tax credit in the proportionate of the turnover. So no chances of manipulation will be there. Okay. Now, sir, Head Office has asked one more question. That suppose, sir, while transferring the input tax credit to various branches, we have filed the return, but by mistake, we have transferred 6 lakh rupees to Maharashtra and 6 lakh rupees to Bengaluru. But in actual, it should be 5 lakh rupees to Maharashtra and 7 lakh rupees to Bengaluru. Now, after filing the return, there is any option is available? Yes. Government said that you may issue the debit and credit note. You may issue the debit and credit note for reduction and enhancement of your input tax credit. If you have wrongly distributed, you can issue the debit and credit note and you can adjust the figure of your ITC. So input service distributor is a separate registration that should be taken by the head office, through that the head office can distribute the ITC between the various branches for the centralized services availed. The distribution will be in the ratio of turnover. Suppose during the last financial year, no turnover is there. In that case, we'll take the last quarter in which there is a turnover. We'll take the turnover of that particular quarter and calculate the ratio. If you have distributed any excess input tax credit or less input tax credit, in that case, debit and credit note concept is there. This is the complete mechanism of input service distributor. Earlier, the head office may plan for cross charge. That means head office is just going to issue the invoice with the name of branches and transferring the input tax credit. But from 1st April 2025, government has discontinued the mechanism of cross charge. Government said that if you are dealing in these type of practices for centralized services, you have to take the registration as an input service distributor, that is ISD. This is mandatorily required. Sir, just look on number 20. Whenever we'll look on number 20, we'll fold 20, 20. Am I right, sir? Whenever we'll look on number 20, will fill 2020. 2020 is a distributor. 2020 is a distributor. So this section number 20 is regarding the input service distributor, that is ISD. Okay. 20, number 20, when we'll see 2020 is the distribution, and this section is related to distribution ISD, input service distributor. I think this memory technique is okay for everyone. Whenever you look on number 20, first concept will be there in your brain. 2020, that is distribution ISD. And sir, if you have excess distributed any ITC or less distributed any ITC, in that case you may issue the debit and credit note, and the same has been governed through the next section, section number 21, that is debit and credit note on account of ISD. Okay. These are not normal credit and debit note. Normal credit and debit note we'll discuss at the time of our discussion on section number 34. But now we are just covering the debit and credit note on account of ISD, that is input service distributor. Is that okay, sir? For everyone, this concept is okay. Now we'll go for a recap. Sir, section number 7, S for supply. Supply includes sale, exchange, barter, transfer, lease, rental, disposal, agreed to be disposal in the course or furtherance of business for a consideration. If no consideration, in that case we have schedule number 1. If consideration is there but not in the course or furtherance of business, import of service. Also club member ko provide karwata hai, that is also chargeable to GST. Then after we have decided that this is a supply, we have to decide it is a supply of goods, supply of services, title transfer, goods, right to use transfer, services. Then after we have done that, neither supply of goods nor supply of services are exclusive list of goods and services which is neither treated as supply or goods or services, so no GST. And also government has power to treat a particular supply as a supply of goods or as a supply of services. That decision will be final. Then after we have done how we can divide that this is my composite supply, this is my mixed supply. In case of composite supply, 2 or more supply will be there. One will be principal supply, another will be ancillary supply. The rate of GST applicable as per the principal supply, but a particular supply which is not a composite supply, the same will be treated as mixed supply. Okay, and for becoming a supply as a composite supply, naturally bundled is required. How we can say that this is naturally bundled? Based on market perception, based on maturity of client, and based on the nature of the product, we can say. Then after we have done section number 9, imposing fine, that is charging section. Sir, for mixed and composite supply, number 8 is a mixture of 00, so section is mixed. Number 8, mixed and composite supply. Section number 9, imposing fine, that is charging section under GST. All intra-state supply CGST will be applicable, not exceeding 20%, except alcoholic liquor for human consumption. On 5 petroleum product, GST will be applicable on a future date, and on a goods or services which we are going to notify, the GST is payable by the recipient, and also e-commerce operator related performance. Section number 10, number 10 includes zero, that is zero eligibility to claim the input tax rate in case of composition scheme. No ITC, concessional rate of GST is required to be paid in case of composition scheme. Section number 11, E for exemption, government is going to issue the notification for the exemptions of the goods and services. Section number 12, number 12 is the indication of time, so this section is related to time of supply in case of goods. Section number 13, time of supply in case of services. Section number 14, time of supply in case of change in rate of tax. Section number 15, 1 plus 5 is equal to 6, that is value fixed. Valuation, buyer and supplier are not the related party, price is the sole consideration. Your transaction value will be treated as taxable value. All the incidental expenditure that should become part of your value of supply. And sir, also if any expenditure which has been bear by the recipient on behalf of supplier, the same also become part of your value of supply. And if buyer and supplier are related party and price is not the sole consideration, in that case rule number 27, 28, 29, 30, 31, 31A, 32, these are the rules which is available. In case of pure agent concept, in case of second-hand goods, we have done, and we have done the section number 16, 16 and such ITC milegi fatafat in the course or furtherance of business. GST are to be invoice, debit note, goods received, paid supplier, or file return. Also in case of lots, last lot ki case mein you will be eligible to claim the ITC, and also you have to make the payment to your creditors within 180 days, otherwise reversal of ITC is required. And in case of capital goods, taxable value, depreciation, otherwise your ITC not allowed. And also the maximum timeline to claim the ITC, next financial year 30th November or annual return, whichever is earlier. Sir, in case of section number 17, for personal purpose ITC not allowed. In case of Business purpose ITC allowed in case of exempted, ITC not allowed but partially, rule 42, 43. And also banking company special option, and also blocked credit in case of motor vehicles, vessels, aircraft in case of food, beverages, beauty treatment in case of immobile property, plant or machinery, plant and machinery, and in case of notices, decree and judgment, and in case of expenditure on account of personal and composition. Then we have done the concept of claim of input tax rate in case of new registration, voluntary registration, exempted to taxable, taxable to exempted, and also composition to regular and regular to composition. And we have also done the discussion on the job worker, that is additional place of requirement, 3 scenarios. Also within 1 year input goods and 3 years capital goods is required, ITC 04, section number 19. Section number 20, that is input service distributor. When a head office is going to avail the centralized services on behalf of whole as an industry, then ITC should be distributed by taking the registration as an input service distributor. And also if excess distributed, less distributed, then debit and credit note are there. This is the whole discussion which we have done. In our next session tomorrow sharp at 7 p.m. we'll discuss about the registration under GST and the special mechanism regarding the registration, regarding the invoicing, regarding the debit and credit note, and regarding the records under GST. In our next session we'll meet and we'll discuss these type of things. Thank you everyone for joining. Thank you for listening with us. Good night. Bye-bye. Take care. If you have any query, any concern, please put it in the live chat box. We'll discuss.